Hello everyone. This video we're going to be doing the dumb trading strategy on a 15-minute time frame using the Euro Swiss franc. And I'm going to mix it up a little bit here and there so that people can see that this dumb trading strategy actually works across pretty much any time frame. Sometimes you got to be picky about which one you do the 1 minute on. Like for instance, I wouldn't trade the Euro Swiss franc on a 1 minute chart. And simply because it's got the euro involved. The euro is one of the most manipulated currencies. Well, it is the most manipulated currency on the planet. So I'm not going to trade the 1 minute on this one. However, there are some great movements that it can occur even on the 15 minutes. So we're going to go ahead and run a back test. So today is February 28th. Let's go and randomly grab something over here. What is this? This is the 25th of January. Okay, so what are we looking for? Same rules as always. We are wanting to see the price close beyond the EMA, and at which point we check our indicators to see whether or not we have three that match the direction that the price crosses, the EMA. So if you want to learn more about that strategy, I encourage you to go to my website, check it out. It gives you the good foundation there. The only difference between what I teach on the site and what I'm going to be applying here is because we're scalping, I'm going to be employing you have to have three indicators line up. That's it. Okay, so if you want to learn more about that, check out the dumb trading strategy for gold that I redid and the dumb trading strategy for US yen that I just did. And this is going to be the theme here, guys. We're just going to make sure that we get this as simple as possible for everybody. So let's move forward. We've got two indicators telling us to go up at the moment. We are in a strong confirmation from Lux, but that means it was a long time ago. Clearly in some consolidation here, so we're going to just create a consolidation box. And when the price closes outside of the box, that's when we can look for another opportunity. No, I'm not going to call that a close outside the box because it's still ranging. Okay, there's one outside of the consolidation range, and it's actually saying that we're good to go down. Yep. Three indicators, definitely four indicators telling us that we can go down, but we do not take the first one after a consolidation. We have to wait for the next confirmation because there we go. There it is. So the first one, that one right there, definitely gave us a strong confirmation to go down, but I like to see that we need to see more than just after the consolidation, because many times what happens after the consolidation, the banks like to pretend like it's going to go one way, and then they will just inject a bunch of money to take retail traders out, headed the other direction. But here's our second confirmation. So following the rules, we're going to short because we crossed below with three indicators. 1, 2, and 3 indicators telling us to go down. ATR is 19, so that means that we'll be doing 19, that's 10, so 29 plus our spread. My spread on the Euro Swiss franc is a little bit higher than with the the USD yen. What was it? 4, I think it is 5. So 29 plus 5 is 34. On the plus side there, we've got 34 plus 17. No, you know what? I'm going to do, because this is 15-minute chart. So 34 times 1.33. That's my take profit. I know it's a little bit less, but that's the way the cookie crumbles. And away we go. So far, a little bit of drawdown and almost a stop loss there. We do have two indicators now telling us it's a reversal, but we aren't out of this yet. Now we're back into profit again. Boom! There we go. See, I only had the two indicators telling me to go down. or telling me to go up, so I didn't close my trade. So we went as far as this trailing stop would have taken us out at the 1.5 ratio level. So let's mark down the profit here. So the first one would be at the 1.33 level. So that's a plus 2%. And then at the other one, what did I say was 2.5? So we take a look at our, so 1.5, because our trailing stop takes out one of those units of ratio. So 1.5 times 1.5 is 2.25. And we have a buy signal confirmation 1, 2, and 3. We do have 3 indicators telling us to go up. However, this bar is it's 3 times our ATR, well over 3 times our ATR. What is the high and low here? High is 814, low is 216. Yeah. 1726, 814. It is over 3 times our ATR, and so we are not entering a trade. That's typically a market imbalance. Whenever we see that kind of thing, all of a sudden the ATR rising up like this. This is a second opportunity though, right here, because we drop down and then we're going back up. So we're going to go ahead and enter a trade because I also have 3 indicators. I got Lux with a strong confirmation. I've got strength in the histogram. DD is on my side, and I've got the volatility, or sorry, the oscillator and my volume all in one shot. So 33 times 1.5 plus my 5 pip, or my 5 tick spread, 54, so 55. And then on the top side, we've got times 1.33, 72. It's definitely not liking this area, that's for sure. I've got 2 indicators telling me to go down now. Is that right? Yeah. We're still in. Just the 2. See, take profit, guys, and then my trailing stop would have taken the rest of it. Amazing. Isn't that something? So, trailing stop would have taken it out somewhere in there. Okay, now let's do the math on this. $1.71, which is a 0.71 times 1.5, 1.065. So we got the 2% on the first trade. What did I say? 1.06. There we go. And now we're waiting for the next confirmation. Price is crossing above. That might be a continuation. I've got volume to support it. Still inside the oscillator, but I'm gonna go for it on this one here. $67 on this end. And I'll just drag this manually to the 1.33. Whoa. There it is. And almost still in this trade. There we go. Take profit, and trailing stop is at 67. Still in. This one I think is going to be where it is. Yep. Possibly even before that. Let's just see. 67. Nope, that's only 49. So yeah, we would have made it up to this peak here. before we take our trailing stop would have taken. So we got the first one, and then we would have traded back 1.605. To round it down, to account for slippage and all that stuff. All right, so now we have a crossing below, but only 2 indicators telling us to go down. Is that right? No, we've got 3 because the oscillator flipped as well. But this is the first one after a new high, so I am not taking this one. I do it on the 1 minute because the likelihood of getting some pips are there, but on the 15 minute, I do not do it. I wait. This is just the first confirmation going against the previous trend. I need to see a new high that is lower than the previous high before I say, yes, I can do this. And there it is. So now I can look for an entry. 1, 2, 3 indicators telling me I can go down. So I'm going to go ahead. It's a tricky one though, because we can see this area here, this consolidation area might be what we're going to bounce off of. But rules are rules. 31 times 1.5 plus the 5 is 52. And on the top side, 68. Well, I'm going to go 69. And away we go. Let's see what happens. Yeah, so far so good. We're in profit. Now we're break even. Let's check our indicators because we just crossed. I only have 2 indicators telling me to go up. I'm still in. I now have 3 indicators telling me that we're going up. On this crossing here, was it? 1, 2, no, it's just here. So that's an early exit. So you make money when you do that. Well, unless of course it decides to go down. Consolidation, clearly some consolidation has just occurred. We are crossing below with confirmations to go down. It's technically not it's consolidation in just this area here, so probably like on the 5 minute or the 1 minute, that would have been consolidation. But technically we aren't in consolidation because the previous high is lower than the high before that, and the low is lower. So this is an entry. We can go ahead and enter the market here because it's a consolidation on the smaller time frame, but not on the 15 minute. And we've got the 3 indicators, 4 indicators telling us that we can go down. So we're going to go ahead and do it. So 35 on this end. And what does that give us over on the other side? Times 1.33, 47. And away we go. Still doesn't want to close below that line, does it? We're just gonna hang out, I guess. Now it's definitely consolidating here. I would just be leaving this alone. There's our 3 indicators to go up. Yeah, it's like a shelf of consolidation here, then drop into another shelf. Let's close it on this bar because that's 3 indicators. Yep. So 3 indicators going up. We're still not in consolidation on the 15 minute, technically. And now we have 3 indicators, 4 indicators telling us to go up. 5 indicators telling us to go up. This should be good. 13 plus 6 plus 7 is 20, 25 with the spread. And then on the top side of that, we're going to go to 33. In the minus right now, we're still only one indicator saying to go up. There's two indicators going down, and it looks like my stop loss would have hit there as well. Yep, stop loss would have hit, so that's a -3 on that one. Oh, I didn't put in the other numbers. Let's quickly do that. This is minus, what, precisely 12 out of 52. .69. That one I'm just going to say is a break even, and then here's a -3%. Okay, so now we have the 3 confirmations going downwards. 1, 2, 3, 4 with Lux. And so now 15 plus 8 is 23, plus my 5 is 28 on the top side. That'd be about 50 on the, yeah, less than that. There it is, 37. And here we go. A little bit of drawdown, going into profit again. There it is. That might have actually already taken my stop loss because our ATR is pretty small here, 28. Yeah. Sometimes tricky with that style. You may want to wait to close until you cross the EMA again. That might be your exit. Because yeah, you definitely could get some more profit out of that. But in the long run, you know, that's a lot of work because you got this reversal here right away. 3 indicators telling us to go up, but that's the first one after a new low, so we are not taking it. Boom! There is a low. That is a massive wick. We are not entering the market at this time because that is too much volatility. Something opened up. What happened? Markets. Yeah. All right, so we've got a crossing above against the trend, crossing below with some nice volume there. So even this, you could have used this as an entry, but because it's just right after such a big long candle like that, I'm not going to take it. That could be a continuation, but it's so soon after. Like this is only it's a couple hours now. Okay, so here is where the continuation would be, except we don't have strength. No strength, guys. I'm not going in if I don't have the strength. On a continuation especially. Now I miss opportunities that way, but I also avoid some, when it's wrong all the way. It's hard to catch that early and minimize losses on that. Yeah, so we're just gonna let this pass by. Okay, so now we've got 1, 2, 3. We've got a double bottom, and we've got 3 indicators telling us to go up. So we're gonna go ahead and open up a trade. And 42 is that, so that'd be 61, 63. And on the plus side, $84. And we're in the drawdown already here, but I only have 2 indicators telling me to go down. We're still in 2 indicators, still only 2 indicators. Boom, there we go. There is it, or is there a third indicator? 1, 2, 3. Nope. This one here, guys, this is the reversal right here. So that's an early close. I've got strength, so that's 1. I've got the DD, 2. Oscillator is just on the cusp there, and then the volume does actually have a breakout at the same time. So that is an entry. And 43, so that is going to be 64. And there's our 1.33. And we've already come back. Trailing stop would have caught that one. And there we go. There's the punch for the first trade. Let's get some of these in here. So 1.93. .93 times 1.5, 1.4. Alrighty, and then this one here is a full out loss, I think. No, it was an early exit, 49 out of 63 times 3%, 2.3333333333. And then, so trailing stop would have hit at 0.27 times 1.5, that's 0.4. And we definitely hit the take profit with our original trade. All right, so there's a bunch of trades we took here. 1, 2, 3, 4, 5, 6, 7, 8. We're just gonna see how that goes. So it obviously you might not trade all hours of the day, but I'm just using this as an example of how this works, and we'll see what our ratio is here and everything. So let's do the calculations. Okay, obviously you can use some compounding interest on this just because you're working the 15-minute chart, so you have a little bit of time to adjust your risk every single time. But overall, that is a 10.69% of a set of trades, with 8 trades and 3 being losses. That's not bad. That's not a bad ratio at all. So 3 divided by 8, 37. So what's the other side? .5% win ratio. What did I say? 0.5 win ratio. And then was something that one of the commenters said was that when I'm doing these back tests, it's good to determine how much was actually taken out of my account as a part of this. So we can do that in the by just saying, okay, so in total, overall, so in total, I should have actually grabbed those numbers, 4.25 plus 3.06 plus 3.6 plus 3.4 plus 2.4. So 16.71% going up. And then that makes it 0.69 plus 3 plus 2.33. Again, you could be compounding this, and so you wouldn't be necessarily 6.02. Yeah, and there you go. There we have it. There is a 62.5% win ratio on the Euro Swiss franc on a 15-minute chart using the dumb trading strategy and Lux Algo, because Lux Algo really helps out, gives us that extra confirmation. You know, of course, the oscillator, that's a huge help as well. Yeah, if you have any questions, let me know. If you've got something that you would like me to backtest, leave a comment. I'm really excited for this dumb trading strategy. It's getting simpler and simpler. The more that I use it, the simpler it gets to use. And I'm doing my best to make sure that it's as simple for others to understand. So if you can think of things that I need to cover to help you understand and grasp this concept, this strategy, then ask away. I want to hear the questions. So thank you so much, everybody. We'll see you in the next one.